Good morning, everybody. Welcome to today's game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so we have a lot to go over today. We have charts moving, we have Bitcoin moving, we have stocks moving, and I'm going to cover it all and give you the levels to buy and sell. All right, into the action we go. Let's go right into the keys of the day. Little light on economic news. So again, just to be aware, a little light on economic news, but there's still important things to discuss. Number one, the bank term lending program. Remember, I've discussed this with you guys. The BTFP expired on March 11th, 2024. So that was on Monday. Now, the kicker here is most loans that were taken from the Federal Reserve. And remember, this was an emergency lending program that came to fruition because of the crisis a year ago when Silicon Valley Bank failed and the other banks were failing. So again, the Fed introduced this emergency lending program, and over the next month, from basically March 11th on for the next month, a lot of banks took the loans. They took the free money essentially. And what they did with it, when they realized they didn't need it, they started to utilize it to make money for themselves by lending it out and putting it in places to increase liquidity in the system. All right, so it's not a surprise that what we saw is the stock market did really well from last March. After you saw that initial panic drop, guess what? Markets went up, and away for the remainder all the way into this year. It's because of liquidity. More money in the system. People say, wow, I have all this money, or the banks say I have all this money. Let me put it to use. Let's buy some NVIDIA. Let's do this. Let's do that. And it pushes asset prices up. All right, so again, the kicker here is that for the next month, you'll see a lot of these banks having to pay those loans back to the Fed. That's pulling liquidity back out of the system. And again, in my opinion, if there's ever going to be a pullback in the market, it should be over the next month period, or it should start over the next month period. Okay, next up, we also have reverse repo. Reverse repo, remember this, all right? All right, so first off, what is reverse repo? Reverse repo was a way for the banks to basically store money at the Federal Reserve and make a great return based on the Fed funds rate, based on the Fed raising rates, and then the Federal Reserve ultimately pays that money back to the banks. Well, what's happened here, guys, and I want to show you this chart, really fascinating chart here, is that here is your reverse repo. Now, again, this is the banks, right? Let me put up a good color so we can all see this here on this white background. But basically, this is the bank storing money at the Fed. Essentially, think about it like a sponge, right? So you have a sponge and you have a bucket of water. The Fed basically is the sponge. The sponge goes into the water, sucks all the water up, and the Fed has all the water. What's going on? This is the Fed sucking the water up. They're taking liquidity out of the system. Then what's happened over the last, basically here over the last, let's say, I would say since 2023 or so, what we've seen is the banks starting to get that money back. The Fed is squeezing that sponge, and all the water is coming back to the banks. Now, the kicker is this, all right, so if you look at the charts here, when did the stock market top in 2020, before the 2022 pullback? And the answer is very simple. In November, okay, November of 2021, right? So again, what we saw is as the banks started to take liquidity out of the system and store it at the Fed, we saw the market start to sell off starting in November 2021. And then as we saw here, this actually, the top right here was October of 2022. What happened in October of 2022? Reverse repo stopped, meaning the banks stopped storing money at the Fed, and the Fed began to pay the banks back. What's happening? Like when I pay, let's say I borrow $100, so I'm the Fed. I borrow $100 from you, you have $100 less to spend. Now, what happens is I pay you back, let's say $120. This is the Fed paying the banks back because reverse repo is going down. Essentially, that water's being squeezed back, the liquidity's going into the banks. And so essentially what we have here is that we're seeing all this liquidity come back to the banks, but what I'm pointing out here is that we're back to 450 to 500 billion. We're almost getting back to normalized levels going back to this period over here. And so the point being is that all this liquidity that's being forced back into the banks, that the Fed's paying back into the banks, is getting back to a level where it's going to slow down. And again, that means less liquidity in the system, or not the constant waterfall from the sponge coming back into the bucket. Hope I explained that clearly, guys. But again, if you look at the dates, this right here, right? So this is when the markets topped in 2021. And this is when they bottomed in 2022, right? In 2022. And this was the rally. So as the money comes back to the banks, the stock market has gone like that because there's more money in the system. All right, so again, these little tidbits, at least to me, it kind of creates a situation where you can start to understand how liquidity plays a major role in whether the stock market's going up or down. That's why when the Fed raises rates, it tends to push the stock market down because it's pulling liquidity back. People are putting money and parking money in places where they're getting higher interest rates versus having it out there and just pushing it into stocks and pushing it into different asset classes. Okay. Dollar Tree reports earnings that don't impress investors, faces significant headwinds, plans to close 970 stores. The biggest headline here, and by the way, the stock's down 5-6%. It's not a huge drop today, but the biggest thing to me is just the commercial real estate, CRE, and I noted that here, right here. The commercial real estate situation just keeps getting worse, guys. Again, if you go to a strip mall here in Florida, it's almost 50% empty at this point, or at least a lot of them are. And again, this is a lot of dead weight. I call them zombie banks. The zombie banks out there, they're holding on to paper that is basically worthless or worth 50% or less from what they paid for it. But because the Fed has basically backstopped them, they're not failing. These banks are not failing. Should they fail? They probably should. There should be a lot more damage to the system. But again, the Fed has backstopped that. All right, next up, we have a market rally in spite of the CPI. So yesterday, guys, we know that essentially the stock market rallied up. I talked about how this didn't make a whole lot of sense, except yesterday for the fact that it essentially locked in the chance of a June cut. And I think about it like this. You know, the market has, and investors have this sense where they look at things and they say, okay, well, you know, if the Fed would just finally start cutting, then they'll just keep cutting, right? Because that's historically what has happened. If you look at our history as a financial reserve or Federal Reserve based economy, it's usually, it's very rare the Fed cuts and then stops. And so the market yesterday, in my opinion, falsely rallied. It still rallied. It is what it is. But don't be surprised if it becomes a rally that fizzles out very, very quickly. And essentially, I think yesterday it was kind of the, oh, thank goodness, again, we're going to see a cut in June. But I think, again, with those CPI numbers being hot, and we'll get PPI data tomorrow, if we see inflation continuing to uptick, it's going to make a big headache for the Federal Reserve, and it's not going to be pretty for the asset markets in the not-too-distant future. A couple final things here. Markets are now await the PPI data. That's tomorrow at 8:30 a.m., so let's watch for that. And Tesla is cut to a sell rating by Wells Fargo and sees 30% downside. We could take a look at that chart. All right, so let's get into some charts now, guys. I want to just showcase this. So yesterday, this is the 10-year yield. And again, we're trading in this wedge pattern. It is a bearish wedge pattern. And why is it a bearish wedge pattern? Well, if we zoom out, what do we see here? We see a bigger move to the downside right here. And again, I'm going to actually change my color here because I know you guys can have a hard time seeing that on the black background. So there's our move down. And then what pattern formation is this? That's what we refer to as an in spirit of bear flag. And again, bear flags are sharp drops, and then you get the consolidation like that, which generally, and I say probability-wise, because everything in technical analysis probability-based, leads to further downside like that. So in general, even though we're moving up on the 10-year yield for yesterday and again today, you would generally expect us to eventually roll over, let's say we go up here, and come down like that. The only way this is coming down further is if the economy gets in trouble. Because right now the CPI data, the PPI data, the inflation data is not telling us that yields can go down, and that's why yields the last couple days have gone up. But again, if we start seeing the economy really weaken, then yes, yields will come down further. There's no doubt about it, as I have very little confidence, like many of you, in the Federal Reserve actually standing their ground. All right, it used to be like, oh, 100%, 2% inflation is the max that we're allowed. Then it's like, oh, 2.5% is okay. Then it was 3%, and I think that's where we are now, like 3%, and they'll still cut rates, right? And that's where we are now, and they're talking about a June cut. So it's this moving goalpost, which is why yields will still be allowed to go down, even with inflation slightly elevated. All right, by the way, it all comes crashing down at some point. Speaking of that, I want to show you something. By the way, this doesn't necessarily dictate what's going to happen, especially near term. This isn't a near term call, but this is something that I was discussing with the traders on the floor, and it was fascinating to us, and so I wanted to let you guys know. So what you're looking at here is the Dow Jones Industrial Average, and this is the 1929 high before the stock market crashed for the Great Depression, and this was the decline that we saw in the Great Depression. Right? Incredible drop. We know that, again, the Great Depression made the Great Recession look like child's play, basically. Okay, so what I did here is we took a measured move, or essentially a distance. How much did the market drop? Okay, how much did the market drop during the Great Recession? Dropped 88%, approximately 88%, give or take, 87%, 88%, depending on where you draw the line. The next thing I did was, just out of curiosity, what if we're looking at the markets now? And again, this assumes that we're at a top here. I still think the S&P could go a little bit higher. I think the NASDAQ's probably topped. But let's just say this was your top, or in this general vicinity was your top. What would we see if we saw an equal decline in the S&P of 88% or 87% from where we are now? Where would it take us? And I love this. And again, please understand that this doesn't necessarily mean that this is going to play out. But essentially, if we drop down 87%, what do we get here? And this is where the stuff kind of gets freaky, right? Because you look at this, what's that low? If you drop, again, that's 87%. We know that that's approximately the drop for the Great Depression. From current levels, what do we get? The Great Recession low, double bottom. Now, again, I just want to precursor this by saying that this doesn't dictate that this is how it's going to play out, but my job as a technician is to look for things like this, because if it gives me even the slightest 0.1% edge in what to expect or when to expect it, it means it translates into profits. And again, that's what I want to do. But I think that is so crazy to think that you're looking at like a double bottom if in general this were to become a major high in the stock market, and we would see a big kind of a Great Depression, unfortunately. And again, not saying that that will happen in the near term, although I do think the 100-year cycle coming up from the Great Depression is worth keeping a note on. Please understand, Spanish flu to COVID, Great Depression to potential Great Depression type situation. All right, going into the markets today, guys. So a couple things to look at real quick. I do want to just look at the Qs. The Qs confirmed a breakdown. Look at where they closed yesterday, right back into resistance. So again, here's your close below, here's your confirmation, here's your retrace to the scene of the crime. The big question is do we see it get rejected here and pushed back down? That's what should happen. Now, if we close above this line, please understand, you must now confirm back above to reestablish. Once you confirm below, you must again confirm back above to reestablish this range. Otherwise, it could be looked at as a fake out by institutions trying to lure investors into a bad situation. All right, next up, we look at the S&P 500, or the spiders chart. Same thing, incredible. Look at how tiny this is now. We're still stuck in this. We have yet to ever close below this wedge pattern. Incredible. I have barely seen, for this length of time on a chart, almost have never seen a wedge pattern come to this head like this. What does it mean? It means that when it breaks, it's going to be big. If you looked at 1,000 of these patterns, 800 approximately would break to the downside, 200 would break to the upside. You guys can see the probabilities based on that. Doesn't mean, remember, there's still 200 times out of 1,000 it breaks up, but just understand that the higher probability is to the downside. All right, couple stocks here again. Dollar Tree, you can see actually Dollar Tree continuing lower here pre-market. Now it's down decently. Like this is now getting in my wheelhouse for looking at it as a potential day trade today. As again, it closed around 150, 152. Now it's trading, it looks like 129 and change. Let's take a look at the daily. Is there a level to watch? So when I go to the daily chart, the first thing I recognize, right, is that was this stock at its lows going into earnings or was it at its recent highs? And you can see lows were all the way down here. It's been basically going up into earnings. That always concerns me when a stock rallies into earnings because, again, it puts expectations higher and higher. The higher price goes on the stock, the higher expectations have to be, or the earnings have to be to continue to push it up. So if we look at where that level could be, so interestingly enough, where are we trading right now? Right here. Okay, right at 128, give or take, right there. Now, again, that to me is not a buying level. I'm not going to play that level, but should we continue to dump out? Let me see here. By the way, it actually looks like this is also right in alignment, the gap window right there, which is pretty cool. But if it breaks through here, the next level of support is going to be right in this zone, which again, just getting you an actual quote on that, it's around 116 to 117. So 116 to 117 would be your next level on Dollar Tree. All right, wanted to quickly take a look at Apple. I still think Apple has more downside. We've seen it bounce when NVIDIA has pulled back, and then yesterday NVIDIA had a huge update, and what did Apple do? It was actually a little on the weaker side, but this zone right here, I'm still looking for 155 to 160 as a downside target on Apple. Looking at Boeing, guys, Boeing's trading lower again today. They just can't get out of their own way, but the kicker here is we actually are starting to get close to a level where we could bounce. Again, 170, I think it's around 175. Let me double check that here. Yeah, 177 to 176 actually is that zone right there. So you're looking at that as your next support level on Boeing. And by the way, it doesn't mean it can't break that. It's just at that point, you should see some buyers stepping up based on a pivot low on the chart. Okay, now let's talk NVIDIA real quick. Yesterday, NVIDIA had this rip-roaring rally. A lot of people are like, oh, bull market back on. This is not unusual for stocks that have made a top or are making a top. What ends up happening, first of all, you have the power of the engulfing reversal candle here. That is the powerful signal until proven otherwise, right? So again, when you look at charts, you want to keep it very black and white. And what I mean by that is when you have an engulfing reversal candle, just like a topping tail, there's a certain amount of weight that comes with it. And to negate that, you must close, and I lost my little cursor here, my little drawing tool, but you essentially have to close above that high. That's the way it takes over the bullish narrative again. Now, again, a lot of retail bought in here because the buy the dip mentality is like, oh my gosh, it just had this big pullback of $100 from high to low. Buy, it's going to go to the moon. That is normal because when you come off such a dramatic run like this, you're going to see people saying, okay, here's my dip to buy, I'm going to jump in. That's usually how market tops evolve, right? So again, just as a black and white, let's keep it black and white here, right? Essentially, you could go up here today or wherever, as long as you don't close above that high. Technically speaking, if you go to a TA book, the reversal engulfing candle holds its weight. That is what it is, okay? All right, a couple other charts here. I did promise you guys Tesla, so let's go over that real quick. Then we'll switch into Bitcoin and some commodities. If we go to our weekly Tesla chart, all right, so the first things first, right? So we do have this area here, which is just a little bit lower. That looks to be kind of where it's trading right now. That's at a current price of around 166 to 168. If that breaks, though, you are probably headed to about 135. I would be looking to maybe play this if it got to 135. Again, mainly I'm playing that cautiously. All right, because again, we do see this in a downtrend, even though you have support down here. High, lower high, lower high, low, lower low, lower low. So I'd rather one final flush out, and then I would consider playing this as a swing trade. All right, back to center screen, guys, as we go here. We're just going to take a quick break. 30-second break to thank Luxalgo. Again, they are a sponsor here. They help us do everything that we do here. And I've also created that signal that I'm basically going to be launching in a few months. In addition, I'm now in the process of creating a second one, hopefully a third one by the time it launches. It's going to be pretty darn cool. But here's a quick 30-second break.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, we are back. So we're taking a look at Bitcoin. Bitcoin made a new short-term high today, but it has pulled back. Yesterday was very interesting. We saw a dip on Bitcoin in the afternoon session, East Coast time. We did dip back to the $69,000 high. But again, the kicker here is it was basically held. The buyers stood strong. And so again, one of the things that you want to pay attention to on a technical basis is you have all these hits right here on this line, and then we broke above and we retraced here and it held strong. That's a good sign for Bitcoin. The bad sign would be is if you get a daily close back below this line. We're still watching the weekly as well, but 69, it's really about 69.1, 1.5, but that is the line in the sand right now. As long as you stay above it, net neutral to positive. But again, the question is, can the rug pull come, or will a rug pull come and take us back below? You get back below this line, there's going to be a lot of people that get very nervous about Bitcoin. But again, yesterday was fascinating. I want to show you this on an intraday basis just for educational purposes. I actually did a day trade long on Bitcoin, which was really cool. I did it through the ETF actually, but nonetheless, if we zoom out on this, I want to show you guys this. So essentially what we had, and we can see and just watch the chart behind me here, but again, we had this trend line right here. Okay, so what we saw was Bitcoin trading right on this level here, right? We had pivot low, pivot low, pivot low, pivot low. Beautiful intraday, and this is a 10-minute chart on Bitcoin. So again, when I'm day trading, I'm usually on the 10-minute chart, sometimes even on the 1-minute chart. But essentially what we had here is a breakdown, the flush. Here's your 69 Pierce, or basically 69 Pierce, and that's where I picked it up on the long side. Now again, this is what I mean by when I'm a trader, guys. Like, regardless of whether I have a swing trade long or short, there's always trading opportunities, and that's one of the things that I do is I'm in and out constantly on things. Whether I'm net bearish, net bullish, doesn't matter. I might be net short something, and I might still go long intraday and just play around with it and make some extra money. That's the beauty of being a trader and being able to read the charts like I do. So again, then we saw this bounce, and what I loved about this is it showed, like, where, if you look at this chart, where would you expect resistance to be? And the answer is very simple. Here's your line, right through all these lows. What happened right there? You went up, and I didn't short it, but I could have shorted it for another day trade scalp right there on that pullback off that line. It's just a classic example of TA working beautifully. And again, TA doesn't work 100% of the time. Never think that. It's a matter of probabilities. You see a line that breaks, that's a return to the scene of the crime. It should be rejected initially. And then what you can see here is if we extend this line out, look at what happens. It recaptures it and then gets that pop up again because it recaptured the level. And again, very cool stuff there. I did want to just showcase, I know some of you guys ask for different coins. I generally stick with the top 20 to 30 or so, but here's your Ripple chart. Again, we actually talked about a breakout on this not that long ago when it was trading right under here. I said if this longer trend line can break out, this thing is off to the races. And again, by the way, it may be already done. It's hard to know. But look at this. Look at how far out. In fact, I got to flip to the weekly to see this because it goes so far back. But if we look at the weekly chart on Ripple, look at this. Incredible, right? This is your high going back to 2017, connected through your high of 2021. Here's your high going to 2023. There's your high, and look at that move right there. That's what we call a long-term trend line, especially in crypto. That is incredible. Now, again, if you're looking at this bigger time frame, this might be a bigger breakout on Ripple. There's a possibility here, all right? That's, again, a much longer view. Again, each person has to figure that out for themselves, but you are now above this longer-term trend line, so it does free it somewhat to potentially go higher. All right, quickly going into A couple other charts here, guys. Gold had that pullback yesterday. You guys know I've been talking about the gold pullback, and again, we did get that. Today, we're getting a small bounce. For me, again, as I mentioned, I unloaded a lot of my gold positions when it was up here as a swing trader. And what I'm doing is I'm just saying, okay, well, if it pulls back here, like let's say we get back down to a little bit of a lower level here, let's say, again, I wouldn't be a buyer yet. It's not a big enough pullback, but somewhere in the 2100 all the way down to this 2075 zone, I'll start reaccumulating for what I expect to be another move to the upside on gold. And again, I think gold is just getting started here. By the way, I want to be clear, I still hold a lot of gold in my long-term portfolio. But on my swing trades, those are the ones I exited my miners. I exited, from 10, 15% pops that they had, just taking those and running. All right, lastly, guys, again, silver not doing a whole bunch. It's just kind of staying within this range, so not much to go over there. Oil today, maybe. Could we be getting another attempt at a breakout on oil? We're right back to that $79 high. Remember, guys, 79. You're watching to see, can it close above there and then confirm? Closed above here, didn't confirm. Closed above here, didn't confirm. Will we close above today? If we do, let's watch to see if it confirms tomorrow. If it does, $85 target on that. And lastly, guys, I wanted to make an announcement here. Natural gas is going lower. I did pick up a little nat gas late yesterday, just slowly starting to inch back in that trade. Again, when I unloaded it here, there was a technical reason. That's the key, guys. Why are you exiting? Why are you entering? Is there a technical reason? It was at resistance, and now look, I'm able to buy it down here in this lower range. Now again, just starting small, dipping my toe in the water because I might need to add a double bottom. It might go back to double bottom. Always be reactionary, always be ready in case something doesn't happen the way you think. All right, guys, back to center screen as always, guys, here. If we can get the ball right there, you guys, as always, amazing comments. I love that so many of you guys are learning from these guys. That means more to me than any sort of technical analysis that works out or whatever does. It's the learning, go forth in life and know more, understand more about the financial markets, and just be who you are and hopefully make money. You guys have a great rest of your day. Thanks for tuning in. I'll talk to you tomorrow.